So in today's live stream, we're going to start by looking at the US dollar index to see what the dollar is doing. So yesterday we talked about our analysis, talked about the key levels that we're watching on the dollar. And right here, we talked about this inefficiency right here. And if we go to the 4 hour time frame, we also talked about the gap resting right here as well. We also talked about the low resistance liquidity resting right here. The price smashed through that key level. And another thing we talked about was this key level as well, a potential area the price could actually gravitate to. Also, take a look at this high right here. This is low resistance liquidity as well. So if price should for any reason come to the upside, this would be an easy target. This right here would be an easy target for price to run through these highs. So we're going to be watching this closely to see what the market is going to do eventually. And I still remain bullish overall on the dollar. Overall, I still want to see lower prices on the dollar because overall market structure is bearish. We've consistently been creating lower highs and lower lows and lower highs and lower lows. So all we can do is to consistently look for entries for a continuation to the downside. And right here, I talked about this low resistance liquidity. Price didn't take any liquidity from the high, previous high before dropping down. So we can easily smash through this position and then mitigate this inefficiency. So once we mitigate this inefficiency, I'll be looking closely to see a smaller time frame shift in market structure. If I do see a smaller time frame shift in market structure, I'm going to be looking for sales on the USD XXX pairs. That is USD CAD, USD JPY, USD CHF. And I'll be looking for buys for XXX USD pairs. That is Euro, GBP, US dollar, gold, and Bitcoin as well. So if we do see a drop on the dollar coming down into this position, that means that we should be expecting a sporadic move to the upside with on euro and also on the stock market, on cryptos as well. So that is what I'm going to be watching on the dollar so far. Price mitigated this key level, and after that mitigation, we're seeing this choppy move. I would have wanted to see an expansion, but let's look at the ForexFactory to see whether we do have any significant high impact news for the week. So as you can see, we have CPI news today, which is a very significant high impact news. 12:30, CPI news is going to drop. So you all need to be aware of this. Whether you're in a buy or in a sell trade, make sure you protect yourself. Make sure if you're in profit, trail stop loss to break even. CPI can be very volatile and it can actually wipe out your account if you're trading on the wrong side of the market. So 12:30, we're gonna be looking out to see what the CPI news is gonna, the level of volatility that is gonna come into the market. We'll be watching that very closely. So let's look at the other high impact news for the week. So from Wednesday, GDP, and for Wednesday we'll have 7 a.m. and 5 p.m. on the dollar, 7 a.m. for pound, and Thursday we'll have quite a lot of high impact news on Thursday, so you just have to be aware of that as well. We have 5 high impact news on the dollar on Thursday. So it's going to be a very volatile week. That is the reason why our focus this week is going to be towards the overall market direction. We're not going to try to counter trend anything. So if we believe that the dollar is going to the downside, overall market direction is to the downside, our focus will be on areas the price could potentially come back into and then look for a continuation to the downside. And if we believe that the euro is bullish overall, our focus is going to be on key levels that euro can come back into and then a continuation to the upside. Now we look at on Friday as well. On Friday, we have one high impact news on Friday. So what time is that on Thursday? So basically, the high impact news, the most volatile times this week is going to be from 12:30. You can see on Thursday, 12:30 p.m. That's when we'll have all this high impact news. And then by 12:30 as well on Friday, we also have another high impact news, and also by 2 p.m. And today as well, 12:30 today, we still have this significant high impact news. So you really need to pay attention to this. CPI is very volatile, so just be careful with any trade you're getting into. Personally, in as much as I still want to see the dollar go to the upside, I'm not going to be looking for any buys on the USDXX pairs, and I'm also not going to be looking for any sells on XXX US dollar. What I mean by that is I'm not going to be looking for buys on USD CAD or sells on euro. And the reason for that is because of the high impact news, anything can happen because the overall market direction is to the downside. So you can try buying this and price could literally spike your stops and go up, mitigate whatever it wants to do, wants to mitigate, and then go down. So that is why I never try to trade against the trend when there's CPI or FOMC. I only focus on the trend. If the trend is bullish and I see price come to an extreme discount zone, I'm buying it. So the reason I wouldn't try to buy the dollar because the overall market direction, market structure is bearish. So you can actually buy from here, stops below this low, and then the CPI could drop and it will just spike to your stops and then continue higher only to come in here and then continue lower. So it's just something that potentially could happen. I'm not saying that's what's going to happen. I'm just giving a reference, an instance. So that being said, we're going to look at the euro to see what the euro is doing as well. So on the euro, I'm still anticipate. I marked this out on the euro and in anticipation for the euro to continue lower. This is my key level. This was because I was watching this low high, and then this was a break of structure in my opinion. So if we're bearish, I was anticipating for price to come back into this key level and then continue lower. In as much as it's delivering exactly how I outlined it, you can see price came in there, created a high, a low, a high, took liquidity right here, rallied, then came back down, rallied again, took liquidity from these highs, dropped down, breaking structure right here, retest, and then we saw this drop to the downside. And in as much as it's playing out exactly how I outlined it, I'm not going to try to sell the euro. And the reason for that is because my overall bias is for euro to go to the upside. So my focus is going to be on areas that the euro can potentially come into to continue higher right now. And those areas are what I'm going to outline right here. So I'm going to use, I'm just going to use a fresh chart. So the areas that I'm going to be anticipating for euro to come back into, let's use 4-hour time frame. So if we use 4-hour time frame, this is our high and this is our low. And this right here is a break of structure. This right here is my first point of interest. I would prefer for price to come mitigate the bodies of the candles. That's the most preferable place I would like to see price come into. Bodies of the candles, liquidity, those are my key levels. Inefficiency. This is first point of interest. Now, if we are looking at this as a swing high, swing low, swing high, this right here is my second point of interest. So right here is my extreme point of interest. Extreme point of interest. And this is my second point of interest. So in as much as I want to see price come in here, I would most preferably want to see price come to the lower zone because after we broke structure, we didn't tap into this last move to the downside. We basically mitigated the highs and continued higher. And we also have this liquidity resting right here as well. But the one thing to take note in the marketplace is nobody actually knows what the market's going to do. And if you actually believe that price will definitely come into this position, you could end up missing out on a good move because we're bullish and we're already seeing price create swing low, swing high, swing low, swing high on the 4 hour time frame. Now, price can actually decide that it wants to just come in here and continue higher. And then because you've already programmed your mind that you definitely want it to come here, and then it doesn't come there and you miss out on the entire move, right? But at the same time, in as much as this is a key level, I'm not going to just jump in when price comes in here. I'm going to be watching for reaction. The moment we're in here, the first thing I'll be looking at is key levels that price could mitigate. The first key level I'm looking at is this inefficiency resting right here. That's my first key level. So I'm watching the inefficiency. If price comes into that inefficiency, I'm still not going to randomly jump in. If price comes in here, I'm going to be waiting for 15-minute shift to market structure. So if I do see a 15-minute shift to market structure after that mitigation, I'll take the trade. So you can see that right there. So if price comes down here and I see a break of structure on 15 minutes time frame, I'll take the trade to continue higher. So this is how I play the markets. And if for any reason, maybe because of the CPI news, we do see price drop drastically, running this liquidity, because like it or not, this right here is low resistance liquidity. Every low and high is liquidity. Every low and high is liquidity. And if price takes this low, a lot of traders are going to see that as bearish, a bearish move. And most traders will be anticipating for the euro to continue to the downside. If price takes this low, I would literally love it if price should take this low coming back into this zone. It will be a very beautiful, phenomenal trade, because this is the kind of trade that delivers 1:10. You can literally hold this trade for a month because it would literally be the last move to the downside before an explosive move to the upside. Because every single thing I'm seeing here is liquidity, 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 liquidity. Every single thing I'm seeing there, liquidity. Every single thing right here is liquidity. Low resistance liquidity. Low resistance liquidity. Low resistance liquidity resting all at the upside. Liquidity, inefficiency, so many things are attracting price to the upside. So that is why I'm literally not going to be interested in price doing anything else other than coming down and go higher. And if I have to just take one trade of this, it's going to make me what I would have supposedly made from 10 different trades. So this is how huge this setup is. That is why sometimes in trading, you just have to discipline yourself to be patient enough to wait for those quality setups, because these are setups that they don't present. This kind of setups doesn't present itself to you every single week or every single month. It's just literally once a quarter. You literally catch setups like this once a quarter. So you're basically catching setups like this between 3 to 4 times in a year. But this kind of setups can literally make you what hedge funds make in years. On average, a hedge fund is trying to make about 10-20% a year. A trade like this could literally make you 30-40% just on one single trade. Because if you look at where I'm looking at, the highs I'm looking at, this is not the kind of trade you get into and you close. It's the kind of trade you pay yourself. You can decide, you can look for significant areas. Once price comes there, you take profits. Once price is here, you take profit. You can literally be on one trade for the whole quarter to the end of the first quarter of the year, just one single trade. So I'm going to be watching this very closely, and eventually, if we do see price come down to this key level, that would be beautiful. But if not, if price comes in here, shows us a 15 minutes time frame shift of market structure, then we look for buys to continue higher. So let's check the percentage from where we are to this position. That's about 0.8%, which is very doable for price in a day. And let's say, for example, if price wants to come as low as this, 1.30%, which is also not an impossible task for price. So if we look at from this overall high right here, if we look at from this overall high right here to this low, that's a 2% move, and it took price from Thursday. It took price from Thursday, 28th December to Wednesday, 3rd of January to get to that position. So it's something that could take price, for price to come down to this low, it could take price 2 days. I think 2 days is enough for price to come down to that key level, because overall it's about 1.80% on average. Euro, on average, euro can do about, in a day, euro can do about 1.2, 1.3%. So from this high right here, Friday, so from this high right here, which was on Friday, you can see that right here was Sunday. So from here to here, which is 1.17, that's on average. Euro can do 1.17 in a day, between 1.17 to 1.3, 1.5 average in a day. So even if price is going to mitigate the extreme key level, this right here, from current price action, this right here, price can do that in a day. This right here, price can also do that in one day as well. But I wouldn't expect that to happen in one day, maybe 2 days or something like that. But we're going to be watching closely. We don't want to predict and say the lower side is where price is going to come. All we're going to do is to watch for reactions. If the CPI drops us in here and we see a 15-minute shift to market structure, we look for buys. If it drops in there and keeps going down, perfect. Remember, low resistance liquidity. And if we come in here and we see a significant shift in market structure, 5 minutes is enough for me from this key level, and I'm in. So that is my analysis on Euro US dollar and what I'm going to be looking forward to see in the marketplace. Let's look at GBP JPY as well. For GBP JPY, we have our low resistance liquidity resting right here, inefficiency as well resting here. This was our high and a low and our break. This key level was the last down close candles before an expansion that broke structure. So I'm still anticipating for prices to visit this position. And if we do visit this key level and I see a 15-minute shift to market structure, I'll be looking for buys to continue higher because these highs are low resistance and they need to go. So another key level I'm watching this overall high right here, buy side liquidity. I'm also watching that. Once price takes this high, eventually I'll be patient to see what's going to happen right here. Once we're in here, if we're bearish, then I'd like to see a 4 hour break of structure from this key level to now continue to the downside. Because do not be confused with the overall market direction, overall structure of GBP JPY still remains bearish. From the 12-month time frame, we have a low, a run on liquidity, drop down, break structure, close below the low. So we have buy side liquidity. Price came to extreme discount. So I wouldn't be surprised for a run on stops. And if we do run those buy side liquidity resting right here, and I see a shift in market structure on 4 hour time frame above this key level, I'll be looking for an overall market direction to go to downside. But if price comes in here and it doesn't show me a shift in market structure on the 4 hour time frame continues higher, then it means we've switched bullish. If we do take this overall swing high, that means GBP JPY is overall bullish, and all our analysis will be for it to continue trending to the upside. So that is what I'm watching on GBP JPY. For now, intraday levels, I'm still bullish. I'm waiting for a retracement into the key level, continuation to the upside. If you do have any questions based off my analysis on the dollar, euro, or GBP JPY, feel free to drop it in the chat, and I'm going to be there to answer you. So another one I'm watching is USD CAD. In as much as I wanted to see a little bit more move to the upside on USD CAD, I was anticipating for a run on this buy side liquidity, but you can see how price came very close to that key level and failed to break the highs. And now we're seeing this is our overall swing low, swing high on 4 hour time frame. Price drop below it, breaking structure, closing below it. So if we are bearish on GBP on USD CAD, I would have liked to see price revisit this key level right here. This was the last impulse move, took liquidity, dropped down, broke structure. If we come in here and I see a 30-minute shift to market structure, then I'll be looking for sales. But if I don't see a shift to market structure, then that means price will still be hunting for these highs, because these highs are also low resistance liquidity, because as you can see, we didn't take any liquidity from a previous high right here before dropping. We only took liquidity from the intrastructural highs, which is not so significant. If we took an external liquidity before dropping, that is significant. So highs like this, price can actually come back here and run their stops and then continue lower, because there's still an overall liquidity resting right here. So anything can happen. Two things I'm watching on USD CAD is either we come in here and reject, or price we do this, or price will do this, run the overall highs, and then continue lower. These are two things that price can do. So I'll be watching for one of them, and I'll only execute when I see a significant shift in market structure. On 30 minutes time frame, if I don't see that, there's no trade for me. So that is my analysis on USD CAD as well. If you do have any questions, feel free to drop it in the chat. For gold, I have nothing to say about gold. I wanted to see price drop into a discount, at least into this key level before breaking the all-time high, but that didn't happen because gold was really very bullish. I kept talking about my bullishness on gold. The overall market direction has always been bullish, but it didn't give us that opportunity to get in. It's a beautiful trade. Anyone who caught this trade from this low would have made a lot of profit. 21,000 pips. That is amazing. Risking $1, you would have made $21,000 just on one trade. So that is my analysis. And if you do have any questions, feel free to drop it on the chart. So looking at Bitcoin, what Bitcoin is doing so far, Bitcoin is at an all-time high currently for the first time ever, hitting 70,000. What is next for Bitcoin? Like I said previously, previous weeks, my analysis on Bitcoin, and I'm trying to find the key level that I talked about on Bitcoin, but I think I've already deleted that. But we'll just outline that one last time for the people who weren't on the live call when I talked about my key level on Bitcoin. So where I'm still anticipating for Bitcoin to get to is $82,000. That's my next drawn liquidity on Bitcoin. And it's not really far off from there right now. It's about 12% move to the upside and we'll be at 82,000. That's my next key level that I'm watching for Bitcoin to get to. So I talked about the reason why I'm waiting for that key level to get smashed. And I'll just talk a little bit about it. So from this low right here, you can see to this high, we made about from this low to this high, 62% move, 62,000%, and from this low, 12,000%. So the differential is 5 between so if we do 62,000 divided by 12,190, it's gonna give us 5.0, and then from this new low to the previous overall high, which is 12,190 divided by 2,133. The differential is 5.7. So let's say from where we are, from this previous high, from this previous low to this previous high, as you can see, this is the previous low and this is the previous high. You can see that the differential is 2,100. So let's say 2,100 divided by 5, that's 420. So from this low to 420, as you can see, 420 leaves us at 80,000. So the next key level I'm watching on Bitcoin is going to be around 79,000. So it's going to be around 79,000 to 82,000. That's the next key level I'll be anticipating for Bitcoin to get to. Once we're there, if I had Bitcoin and it hits 79,000, I'm going to take literally 70% of my entire portfolio and just leave very little, maybe 10%, because once we're there, it's overextended, in my opinion. It can go higher, it can go to 100,000, 200,000, but whatever that I'm going to have in the market is something that I wouldn't really care about so much, just in case we see a significant retracement, because now we've broken this high. This is the last key level that I'm watching. Anything can happen and price could retest this kind of key levels. I'm not saying it will, but it's it's a key level to pay attention to. Price can do anything. You can see the inefficiency. So this would be the only place I'll be watching. So that is my analysis on Bitcoin, and I appreciate you all for tuning in. And if you have any questions, feel free to drop it in the chat, and I'll talk to you all in the next live stream. Have an amazing day, everyone.